What's going on, guys? My name is Jaime Bejar, and today we're going to be talking about Silicon Valley Bank. So there's a lot of people freaking out right now because Silicon Valley Bank was the 16th largest bank in the United States. Just think about that, the 16th largest bank. There are dozens and dozens of banks in the country. And this bank became very popular in the tech industry because a lot of tech companies, investors, CEOs, people who work at these companies hold a lot of their cash reserves there. So that's who their main clientele has been. So everybody thought, hey, they should be fine, right? But at the same time, there's been so many things going on the back end that this has been trickling down for years. So what exactly is going on? Again, every single bank out there, you might think they're holding all this money. If you put your money into Bank of America, Chase, and you deposit your money, is your money really in there? Not really. So I hate to break it to you guys, but all the money that's sitting inside a bank is not really there. All that money is being lent out somewhere. Who is it being lent out to? It's being lent out to people like you, to businesses near where you live, to big tech companies, right? Whether that be credit cards, whether that be home loans, mortgage loans, whether that be business loans, equipment loans, lines of credit. All the money that is held at banks is basically lent out, right? So how is that affecting the bank? How is that affecting SVB? Well, although a lot of this money is being lent out, most banks tend to put their money into bonds where they're able to get paid a small interest back from the government. But as interest rates are going up, bond pricing is going down. Normally, when all that money is sitting within bonds, yes, it is liquid, but most of the time, there's a time period as to when they can take it out, right? That can be a year, 2 years, 30 days. It all depends what kind of bonds they purchased. So what is basically happening is that while all this money is sitting within bonds and interest rates are going up, the banks are actually losing money. Not all of them, but just like any other business, there are ways where you can lose money. And that is basically part of what's happening with SVB. Think about this. If there's $1 billion worth of money at a bank and you are lending out 80% of it and you're losing money on a monthly basis, and then all the depositors come back and want to pull all their money out, where's that money at? Right? You lent that money out. So technically the money's not really there. Believe it or not, even banks like Bank of America and Chase, you cannot just walk into the bank and pull all your money out. Maybe one person a day can, maybe a few people a day can, maybe a couple hundred a month can. But if every single person walked into a bank and pulled their money out, believe me, most banks would not be able to. The crazy thing about this is that it's not just the bank that's gonna get affected, right? It's not just the people, the companies that have all their money in there. Think about the average family who has all their life savings at this bank. It's literally gone. Think about big companies who have a large portions of cash in there. There's companies like BlockFi, Roblox, and so many other big companies like that holding a large portion of cash in there. If the bank goes down and they're unliquid, they literally lose all that money. Most of the time though, big companies like I mentioned Roblox, BlockFi, they tend to have cash in a ton of different banks because they understand that. They understand that these things can happen. They understand that their money is not 100% secured. The average person does not have over $250,000 where it's insured with the FDIC. But what if you have large portions of your money in this single bank, like a big company like Roblox, BlockFi, or you are a big investor or a CEO at a big tech company and you do have a large portion of money, right? If you have it all in one bank and that bank goes down, you are not covered for everything, right? And that's basically where a lot of this fear is coming through, is that if this bank goes down, other banks continue to go down. That is for sure gonna affect the economy because all these different people in all these different companies can end up basically losing all their money. But the question that people always go back to is, will the US government bail them out? And since this happened back in March, guess what? The US government bailed them out, right? There was actually a couple other banks that ended up going under, and luckily the US government is bailing them out. So what exactly does that mean? I mean, all that simply means is that all these companies, all these people who have their money in there are basically have their money secured and they're not losing it. But what is really going on the back end? Can the US government really just keep pouring more money in there every single year? Think about that. Cash is not endless. Yes, cash is energy. Yes, you should be thinking abundant, but cash is technically not unlimited, right? There's trillions of dollars. There's more than enough for all of us. But if the US government just continues to print more and more and more money, it keeps devaluing the dollar, right? And keep in mind, the US is not the only country that does this. Every other country in the world does this. But what exactly is the long-term play here? Can the US government go down? Can China go down? Can Argentina go down? Can Mexico go down? Can France go down? More likely than not, they're not gonna go down, right? These are big, strong countries. But as more money gets printed, more the country gets affected. the companies get affected, the individual people get affected. The people, the average person are the people who get affected the most. Who knows what's gonna happen? We could be going into a recession at the end of 2023. Maybe we're already in a recession. But at the end of the day, if you truly just focus on yourself, building your business, learning new skill sets, maybe just managing your debt properly, you'll most likely be fine. Just think about this. If every single person invested their money somewhere, how much less would the spread between the really rich and the average person be? It would be significantly smaller, right? Just think about that. If every person invested, that would be a complete shift in how things are. And it wouldn't happen overnight. But if it were the case, there wouldn't be such a disparity in how many more rich people there is than the average person. Thank you guys again for tuning back into my channel. I'll see you guys in the next one.